There is a new worst performer in the weekly dividend ETFs account, and I think you guys are going to be really surprised. It is not from Defiance. Also, we had our first payment from ticker SDTY, the newest YieldMax weekly payer, which is very, very exciting. That brings the total to 12. We have 12 weekly payers, plus there's some new ones coming from RoundHill and some dailies potentially coming from Defiance. I'll link 2 videos at the end for those of you that are interested. Insane things are happening in the dividend investing community. On top of all that, one of the craziest things, we are nearing 10,000 subscribers. I will be doing a big giveaway for that. I'm going to give more details about that later on in the video, and it's just ways for you guys to earn free money as a thank you from me for all the support you guys have given the channel, and especially this series. So I hope you guys enjoy. Let's roll that intro. All we see is red. These things are being cut down daily. We're down again $11 today, making it even worse. We're only positive $13 now in the account because I did add another $100 for the next weekly payer when it ever does come out. So it is just crazy what's been going on in the market. It's been red all over except for SPY, but a lot of things, even recently, SPY has been beaten down ever so slightly. Now, all 12 are in the red. We're going to dive into each of these, look at the NAV erosion, see if they're even still worth holding. Of course, I'm going to hold them regardless. But a lot of news coming out, a lot of details coming out about newer funds, what's going to be the best performer. All of that is going to be found out here on the channel, of course. So we're going to start off with our Defiance ETFs, which typically have been the worst performers, but that is no longer the case. I am going to move through a little bit quicker. I don't want these videos to go too long now that we have so many of these ETFs. We can see IWMY is down 16.7%. We have an average cost of $34.61 and a current price of $28.83. So this thing is definitely in the red. We're down about $17.34. Now we look at the chart. It's just not pretty. We saw a little bit of hope last week, and it was immediately cut down this week with all the red going on. We haven't seen a drop like this since the interest rate fiasco that happened a couple weeks ago. And their dividend is just not holding up as well as I had hoped. Now, this was a really good stint of time where I was like, oh, it's eroding a little bit, but not too bad. And boom, a bad week comes. And that's what we're learning. We're learning about if these ETFs are even worth holding. So you guys can see I have not purchased more. I am not reinvesting the Defiance ETFs because the returns are fairly poor. They are the worst returners in the account as of last week. And I'm sure they're not doing great this week either, just by the look of this chart. So we can see the AUM, 108 million for IWMY, a dividend yield of over 100%. This has been bouncing all over the place, but it continues to be way too high, and the payouts are way too high, and the NAV erosion is also way too high. So the last couple of dividends, we can see we had 10 cents, we had 30 cents, we had 30 cents, and this time we had 27 cents. Now, a very solid dividend for $100 invested, because of course I put $100 into each of these. The problem is they're paying out of the money for the fund. That's what it seems like they're doing. They're losing their actual value because they're paying everything out in dividends that they can't sustain. And so that's my struggle with these Defiance ETFs. And we'll see it again with our next look at QQQY. Same kind of story, down 13.4%. We have 3 shares. We bought them at $34.37 and currently it's trading for $29.76. So QQQY and IWMY, they're battling back and forth as the worst performer they were. Now they've both been outdone, surprisingly. But again, we actually saw QQQY run up last week, and then it sold off with everything going on, which is a bit of a bummer. I was happy to see them doing better, and then this week has just wiped out all of those returns, and we're near new lows. Not quite there yet, but we're getting really, really close. AUM of 145.5 million, and a dividend yield of 84%. A more realistic dividend, but still too high for them to maintain the NAV. Last 4 dividends, we had a low 7.5 cent dividend, then we had 22.5 cents, we had 22.5 cents, and this time we had just under 20 cents. So again, a pretty solid dividend, but the returns are just not what I was hoping they would be for these funds. Now, can they fix it? I don't know. They're launching these daily payers, or at least they may be. Who knows how those are going to actually perform, but I would like to see them dive back into these funds and figure out what is wrong with their weekly payers. Why are they performing and losing NAV like they are? Is there anything they can do to fix it? Maybe before even launching these new ones, but you know, it's not up to me. It's definitely not up to me. Let's go into the only Defiance fund that's actually been pretty decent, and that is WDTE. Still down 8.3%. It's lost to $7. We only have 2 shares of WDTE, but we have an average cost of $42.18 and a current price of $38 68. So it has fallen pretty heavily, pretty poorly actually. So I'm not happy with that by any means, but it's better than the other two funds have been performing. And that's really all I have to say about it. You know, it's actually been relatively consistent. You can see the NAV erosion significantly less, but still falling from $46 to now where it's at 38 in the span of a couple months is not a good look. It's definitely not a good look for those that are investing for the long term. We can see an AUM low of 70 million and a dividend yield of 52%, which is a lot more realistic for these. It's still way over the top. And I know that might sound funny, like, oh, the other one was trading for 180, 50 should be low. It's not low. A 50% dividend yield is absolutely insane. And the older style investors, which I kind of include myself in that more traditional investing style, it blows us away. I never would have expected a 52% dividend to be anywhere near consistent, and that's kind of what we've seen, is it really hasn't been. But of the Defiance, this one definitely is my favorite, and it has actually outperformed some of the RoundHill funds. In fact, I believe it is still outperforming RDTE, which is very, very surprising to me. And a bummer because I own quite a bit of RDTE in my Roth. So we can see the last couple of dividends. We had a 10 cent, 23.5 cent, 23.25 cent, and 23.5 cents. So it's a consistent dividend, and they were really consistent during this time frame until the last couple of days where it really seemed to tank. WDTE is still probably the only Defiance fund that I would own of the weekly payers. They do have some pretty decent other funds. If you guys are interested, I'll put some videos out about those. They have some pretty good ones actually that I was surprised about. The weekly payers are just not it from Defiance. It's really, it's tough to say. I think that they can fix them in the long run if they really look at it and work at it, but I don't know how. I'm not an expert. Supposedly they are, but again, someone pointed out a couple weeks ago that we're really trusting whoever's writing these options to make us money, and that's what it comes down to. And from Defiance's perspective, they're not doing that. They are losing quite a bit of NAV, and they've been in the red multiple times. We'll see if they're in the red still. I have it. I'm guessing that they are. I'm definitely guessing that they are. But now let's talk about that giveaway. I am really excited about this giveaway. So there's gonna be 3 separate winners, 3 separate prizes. The first is gonna be $50, the second $100, and the third, the grand prize, is gonna be $150. And my goal is for the winners to use this money to invest. I want you guys to maybe use it to experiment on what you want to try and buy. Maybe use it in a consistent fund that you're not gonna worry about for a long time. You'll just put it in there. Whatever it is, maybe you wanna buy the weekly ETFs. Maybe you wanna buy the new ETFs. Maybe you wanna buy the daily ETFs. Whatever it is, I hope that the winners use this money to invest. I want everyone to learn to grow and invest. You guys have taught me a lot through comments, through information, through the Discord that you guys have been so kind in. And so that's my goal with this, is to get people more involved in investing. And so what do we need to do to be entered in? Well, this is going to be the hub video for the giveaway. I'm going to pull the winner from the comments on this video. There's only a few parameters. You have to be subscribed to the channel. You have to be subscribed to my smaller channel, Spencer Invest Stocks, which I'll link down below as well. And I just talk about normal stocks on there, some lower yielding dividend stocks. And then this account is more focused towards ETF investing and income focused investing, which I've really had a lot of fun doing. And third, I want you to comment on here, 10K giveaway. Comment that, subscribe to both, and you're in. You're one of the winners. And then I'll be putting out a video for the winners. You guys can watch that and see if you won, and then I'll be sending you guys the money via some sort of app or whatever works easiest for you guys. And again, I hope the money gets used for investing. We're gonna do this once I hit 10K, so it might take a month, it might take a couple months, but at the earliest, I'll be announcing it in April. So currently it's late February. It gives us at least a month. Once we do hit that goal, I'll be announcing it through some videos. But again, I'll be sending everyone back here into the comments, and the winner will be chosen from these comments down below. So if you want to win money, if you want to enter, and again, there's 3 winners, so you have a decent chance. If you want to win, don't forget to comment 10K giveaway down below. Let's get back into the video. RDTE has really underperformed. We are down 12.31%, which is devastating. Our average cost of $44.36. Currently, the price is $38.90, which is not great. It's really not great. This fund has just been beaten down over and over again, and every time it kind of solidifies and finds a low and a high, it just pushes down, and I'm really bummed about that. I thought this one would do a lot better, and it's relatively large, an AUM of 177 million. Dividend yield's inaccurate, of course. I say that every time just because it hasn't been trading for a year, but we're getting there. We're slowly getting there. But what can I say? I'm just a little bit bummed. We've had some crazy red days. This one is one of the largest ones I have in my account. I own all the RoundHill ones and the YieldMax. The YieldMax have been performing better, as you guys know, but RDTE is just draining my account at this point. So we can see the dividends, last couple, 21.5, 28 cents, 25 cents, and 20 cents, just over 25 cents and 20 cents. So 20 cents, not a bad dividend, maybe a little on the average to low side. Nothing really to complain about except for the NAV. We just keep seeing this thing fall over and over and over again. I don't know if it's because of the Russell, if it's because we're going into a red area and maybe the Russell is going to underperform. But even with long-term underperformance, if the implied volatility stays high, I would imagine this would do okay. And it just seems to not. Maybe it's a different fund manager. Maybe it's a less experienced fund manager who's writing these options. I don't know, but I would like to know because it is getting a little bit irksome to me. And maybe I definitely bought this thing too early in my personal account. And that's the goal of this whole series, you guys know, is to show like what these things actually do. They may all do poorly. Some are going to really outperform others apparently. And so I'm definitely bummed, but let's lighten the mood a little bit. Let's jump into our really, really solid fan favorite QDTE. Only slightly down from last week. Our QDTE, it's doing okay. We have average cost of 42.39 and a current price of 39.10. But man, we did see some good gains and it fell back down. We might even have reached a new low. I really hope not. I hope it bounces at the end of this week and that next week is a great week for the weekly payers, but I'm just not sure what's going to happen. This thing is massive, of an AUM of 784 million and a dividend yield of 38%. One of the most popular by far, and people seem to really, really flock to this one. Who knows why? We've had a couple of really deep red selling days, which is never good. You never like to see it down here, but let's look at the last couple of dividends. We had 18 and almost 19 cents a share, 23, 25, and then 24.5. So the dividends have been pretty consistent. They're really not dropping too heavily. They had some crazy ones paid out at the end of the year. And since then, the only problem I have with this one is the price. The price keeps falling and it really is not good for the long term. So I am dripping this one in my Roth. And so I'm buying more and more and more on these down days, which I'm happy about. I really am. It's not the worst, but I do hope this doesn't become a pattern, because if it does, I'll have to rethink about if I'm okay losing so much NAV in order to keep some of these funds. And so far I have been, but maybe one day I'll get tired of it. Let's jump into the other really popular RoundHill fund, XDTE. Down under 6%, XDTE is holding up quite nicely. Quite nicely, actually. We have an average cost of 52.31. It's currently trading for 49.20. A lot better price chart, but still, we're reaching new lows again. A lot of these, just the market has been beating these ones down specifically. But it is interesting because, like I said, SPY is not doing terribly. We're still seeing some all-time highs. A lot of stocks are doing well, so I'm not sure why just the weeklies are dropping. If it's something with the implied volatility, I don't know. But either way, I'm not too happy about it. Smaller AUM, 422 million in comparison just to QDTE. It's still very large compared to a lot of the other funds, and we have a dividend yield of about 25%. So we know that XDTE typically focuses more on price return, whereas QDTE has higher payouts, and we've seen that over and over and over every week. And so I'm curious this week. I don't know which one performed better between the two, but I'm anxious to see. We know it's not RDTE. That is for sure. But also Bitcoin's taking a hit. So let's jump into our Bitcoin RoundHill fund, YBTC. Last I saw, Bitcoin was just about 90,000 at the time of filming, maybe slightly above it. But we can see we have two shares, average cost of 48.75 and a current price of 45.55. The chart on this one's a lot better than a lot of the other ones. It did run way up all the way to 58, and now we've sold back down to 45. Might be a little more volatility. Of course, that was all before it was trading weekly. So remember, this does have an impact on how these will trade when it switches to weekly. So if we see it just tank down from here, might be something to think about. AUM 157 million and a dividend yield of about 55%. Not bad. Some pretty steep selling a couple weeks ago, and it kind of went flat. So not as bad as some of the other ones that were dropping really heavily. The last couple of dividends, we had 88 cents a share. We had 56 cents a share, 56 and a half. We had 30 cents, and then we had 28 cents. So the dividends are coming down a little bit. Now remember, I want to point this out. When I look at it on here, when we look at it on Moomoo, this is per one share. When I'm looking at it on my spreadsheet, it's per $100 invested, which is usually 2 to 3 shares. And so that's kind of a key thing. Don't forget that. I get it in the comments a lot. Oh, you're wrong. You're dumb, which is always funny. I'm like, oh, I am dumb, but I'm not dumb about this. Because no, it is per $100 on the spreadsheet and per one share on here. So just something important to point out. Not terrible. YBTC, still one that I'm considering buying in my Roth. I haven't bought it yet, but I am currently investing more and more money into my Roth as we come to the end of the tax year, which I always suggest if you're not using a Roth account, look into it. It can be really beneficial tax-wise. Now let's jump into the hot seat. And you know, I have not pointed out the biggest loser yet because we haven't looked at it yet. There is a new biggest loser. It's not from Defiance. It's not from RoundHill. Yes, it is from YieldMax ETFs. Of course, I have to introduce SDTY. We have an average cost of $50.46 and a current price of $49.30, down 2.3%. It's a rough week to be hitting the market, and boom, doesn't look too insane. We did have a 22-cent dividend, not bad. I'm not really going to dive into this one too much because we don't have a lot of data yet. We have a low AUM, we have a low dividend yield because none of it's really factored in yet, but SDTY, not too shabby. I'm hopeful for this one. I'm really curious to see how it performs against the RoundHill ETFs because it is a similar strategy, the same strategy in theory. So I'm really curious how those two perform, and we may have one to compete with some of these RoundHill ETFs that have been really consistent. All right, I'm going to stop teasing you guys. LFGY was the worst performer in the account. We're down 18.55%. Now, it's not the lowest we've seen. IWMY was down more than this at one point, but it did rebound. But LFGY is a newer fund, so I'm really surprised by this. You know, we have 2 shares at $52.98. Currently, it's trading for $43.15. Ouch. That one hurts. This one just took a hit. It's crypto. Crypto's down. Tech, maybe tech is down too. I don't know. But all in all, not too happy with this. Could it be a good time to buy? Potentially, but I'm not going to say to buy or not to buy. Of course, it's not financial advice. It's all for entertainment purposes only. Maybe some education in there too. But still, I just not too happy with this one. We have an AUM of 77.53 million. Dividend yield, not accurate quite yet. I am curious. I have a video out about LFGY. It is, I believe it's their highest yielder. Yes, it is. That's the most recent video, and it has been yielding insanely high returns, but maybe that's what's cutting into this NAV erosion. Last couple of dividends, we had 63 cents, 63 cents, 56 cents, and a huge 57 cents dividend again. So I don't know if it keeps dropping, but those dividends are still huge. Are we going to hold on to this? The crazy thing is this thing pays out such high amounts that it's catching up to some of the weekly payers I've been tracking since the beginning. And again, we've only had 5 payments. It's only been around for 5 weeks compared to some that I've been trading for 20. Really interesting stuff. Let's jump into our other fairly new YieldMax ETF, GPTY, down 6.5%, quite a drop as well, but not nearly as bad as LFGY. We can see we have 2 shares, average cost of $50.07, and a current price of $46.82. Now, I'm going to ask you guys, I've gotten comments saying that it's really hard to read this on mobile. That's why I try to read everything out for you guys. There's not really an easy way. I could try and trim it down or have my editor trim it down. I do have an editor now. His name is Jack. He's excellent. He's been editing for me for about a week now, but still really good stuff. You guys can tell the thumbnails are different. Let me know if you like the thumbnails more. I mean, I was making the ones before, and it's not going to hurt my feelings. I know the new ones are better, but I want to know what you guys think as well. But if you guys really want me to try, I'll work with Jack and we can try and slim it down. Let me know what you guys think in the comments. But okay, back into it. Yeah, 2 shares, not too bad. GPTY, really similar chart. Again, only 3 dividends, so it's still even newer than LFGY. Not as high of a yield. AUM is 24.4 million, and the last couple of dividends were 33.5 cents, 30 cents, 29.5 cents, almost 32.5 cents. So not bad. 32 is near the high. So we're kind of finding a base model ranging from, 29 up to the low 30s. Not bad. If it stays consistent, that'd be great. One thing with new weekly payers coming out, guys, remember, I bought this like the first day it was available. These ones almost always take a hit early on in trading. And we can see now it's a bad time, but just remember, I'm not saying they're all going to do it every time, but most of the time when I do buy these, they take a pretty big hit after that first day or two. Just so you guys know, not financial advice. I just want to inform you guys. So GPTY is one that I would own long term. I want to see how it performs. Still very, very new. Let's jump into our tried and true YMAG. It's a sad day when our 2 top performers are just getting beaten down. We have YMAG down 8.9%. Drip is still on, so we are still profiting off of some of these dips with dollar cost averaging. We now have 5.67 shares of YMAG. Cannot wait till we get that whole extra share. We have an average cost of $19.16 and a current price of $17.46. Now, pulling up the chart, we can see we've been buying all the way at the top. We've been buying all the way to the bottom, and hopefully this thing will bounce back and we'll continue buying all the way up to the new high. That's my goal for it. Will it happen? I don't know. Now, I do this thing every week where I try and name the Magnificent 7, and I always fail, but I think I got it last week. Amazon, Nvidia, Microsoft. Oh, guy. Tesla, Google. I mean, 6 is decent. 6 is decent. There's always a few that I forget. I don't remember. That's good enough. I tried. AUM, 353 million and a dividend yield of 43%. So still a really strong dividend yield. The NAV erosion on this one, not nearly as bad. I wouldn't even call it NAV erosion. It's just been a red market recently. A lot of these have just been falling relatively consistently. Although YMAG, I do believe it's still positive. We'll see that at the end of the video in the spreadsheet. And that's where you get all the real information, because Some of these look red, but they are still in the green, which is absolutely crazy. But again, we'll look at the last couple of dividends. We had 19 cents, we had 18.5 cents, we had 5 cents, which was the low payout because every time Microsoft pays out by itself, it throws everything off. It's consistent. Kind of say that every video, but I want to share. And I hope you guys understand, I'm talking to new investors, old investors, to new viewers and old viewers. A lot of you guys have seen a lot of these videos before, and I'm sorry if it gets repetitious, but there are people new watching every single video. So I do want to explain some of this stuff, but I'll try and keep it quick. So every time, yeah, there's 7 funds in this fund of funds. And so they usually pay out 2 payout, 2 payout, 2 payout. And the last week 1 pays out. So it's a pretty consistent drop in the dividend, which isn't terrible. It's just, there's only 7 funds. This payout was 13.5, almost 14 cents, which is much better. It's better than we have been seeing. They've been ranging all over the place, but 14, I'll take it with YieldMax. Let's jump into our consistently top pick, our top returner in the account, YieldMax. We can see down 10.5%. Not bad in comparison to some of the others, but really rough for what we've seen YieldMax doing. We've just seen weeks and weeks of red. I want these. These were really green at one point, so I'm really surprised that everything is red consistently. It just goes to show you never really know until you've actually purchased it and tracked everything. We can see we're at 5.72 shares, which is crazy. YieldMax pays such a high yield that we're actually outpacing YMAG with DRIP. We have an average cost of $17.52 and a current price of $15.70. Very, very interesting. When we jump into the chart, again, not a terrible chart. It's had its highs and lows. We're seeing some new lows, which is very unfortunate, but we're buying and dollar cost averaging down the whole way. So if this thing were to run back up, even go back up to like the 1850s, 1860s, we'd see some nice returns on all of these that we bought down here with our drip. Even though they are really small amounts, you know, you're investing a couple cents every time, it can come back to really help you. Huge AUM, the largest we've seen. QDTE comes in a close second, but YieldMax is at 822 million. Dividend yield of 52.64%. I like YieldMax a lot. These are the only 2 YieldMax funds I own in my Roth. I am a big fan of some of the others that pay monthly. I don't, the NAV erosion really cuts into my overall mentality when I'm investing, which I don't like to see a lot of red. I'm kind of dumb in that way where I don't like red in my portfolio. I know a lot of people don't, but I mean like in the sense of even if I'm getting a good return, if it shows that like my cost average is well above what the current price is, it bothers me. Maybe it's the old style of investing that I grew up with. I don't know, but still, that's kind of what's been holding me back, but they do have some pretty phenomenal returns. But YieldMax, I'm really curious to see how it's done. I did run the numbers, but I didn't look because I like to be a little bit surprised. So we'll see how it has returned. Let's jump into our tracking spreadsheet, our dividend tracking spreadsheet, which I love. I absolutely love it. It's going to give us all the data we need and tell us our winners and our losers with our total return in the account. Before we jump into these dividends, I do want to point out, I will be starting my new account with the other weekly payers. They're very different. I told you guys I'll link that video at the end. They're really interesting. It's a different style. It's not a 0 DTE style of options. They're doing something very, very different. It feels more like a leveraged play, but I'm excited to see what it's going to do. It's also going to be on Moomoo, which I really have grown to really like this brokerage. I'll be honest, the dividends are consistently paid out. It informs me. I get alerts. They offer a ton of rewards. So they give like some crazy amount, like 8% yielding on your uninvested cash at one point. So the link is down below for those of you that are interested. Check it out. Let me know what you think. And I like it. It's very like aesthetically pleasing. It's kind of similar to like Webull and a few others, but it stands out to me after using it for this challenge. So that challenge will also be on Moomoo as well in a cash account instead of the current account that I am using. It'll be separate, very separate. So IWMY, a new lower dividend of 81 cents. I mean, it's traded like this before. Nothing terrible. QQQY, same kind of thing. A little bit lower than we've been seeing, but not the worst. And WDTE, just consistent. That's the thing with WDTE. It's very, very consistent. 47 cents the last 3 weeks is crazy. And if they can keep their NAV, that's why I would buy this one. I really would. Like I said, it's outperformed RDTE in a lot of scenarios, which is pretty crazy. Then we have QDTE, 74 cents, just below last week's of 75 cents. XDTE, 44 cents. Again, kind of in the middle. It seems like everything's kind of just trading in the middle. Nothing's really standing out. Nothing's in a good way or a bad way, which is kind of nice. We have RDTE, 61 cents. This is pretty low because we did scoop up an extra share of RDTE, I believe, sometime in January. And then we have YMAG, 80 cents. Not bad, but I've liked it to be a little bit higher. But you can see the pattern like I was talking about. We had a low payout and then kind of a mid payout. We have a low payout, kind of a mid payout, a little bit better than what we even have seen. So can't complain. YMAX, $1.05, back over $1. I love to see it. And what's crazy, guys, guys, is I've talked about this before. We started investing in October of 2024 were our first dividends. I'm going to have a year's worth of data by the end of this experiment on all of these, where I'll be able to look back and see how much drip has impacted all of this. I'm a huge proponent of drip. If you guys don't know, if you're new to the channel, reinvesting your dividends is absolutely phenomenal. And this is going to be a true testament to that, to show how we made money with drip and the difference between using drip and not using drip. So really exciting stuff. YBTC, a bit of a lower dividend again, 56 cents compared to, it was paying out over $1. So a new low on that one, only been trading for a couple months. Not devastated, but I hope we don't fall into a rut of just paying out less and also losing NAV value. We have LFGY coming in hot again with $1.15. That's why this is the highest yielding ETF that pays weekly, because this thing is just kicking out insanely high returns. I shouldn't say returns, insanely high dividends. I don't know about the returns yet because that thing took a beating this last week. We have GPTY, 65 cents, consistent. I like it. No, nothing to complain about. Pretty solid. And then this is SDTY. It's not factored into the spreadsheet yet. It's not on Seeking Alpha yet. So that will come in due time. It takes it a little bit to catch up. That's why I like Moo because it's so quick. Everything's on there immediately. I think you can even already buy all the new weekly ETFs. I just don't have my money transferred in yet. So I'm going to have to wait probably a week, which is okay. It's already out. We've already gotten a dividend, SDTY, 44 cents. A little bit lower than some of the others. I'm not thrilled about that first one, but when we compare it to some of the other, zero DTE calls, 44, same as XDTE. We have the same number of shares. So not complaining at all. Now we're going to go into our positions tab and we'll see exactly what has made us the most money. I did want to quickly show you the dashboard so we can see we are still up. Market return is down. Total account is still pretty decent, but this is our biggest dividend income month yet. February, we had $31.82. But the reasoning is this has jumped quite a bit because I put more money in and I bought some extra shares of everything because we have the new weekly payers. We probably wouldn't be above that if we didn't get some of the new weekly payers, but I still love this spreadsheet. If you guys are interested, it is available for purchase for my members for the tier 3 channel membership. And the reason I do that is because it helps me afford these challenges. Now, no one knew the weeklies were going to go this crazy and that they're going to be coming out with one every single month now. And so I'm not blaming anybody, but it does really help me financially to put the money in and track it rather than simply paying for things like my wedding that is coming up in a couple of months. So it does help. I appreciate the support. If not, if you guys don't want it, do not do it out of just trying to support. Your view is more than enough. Do not feel guilted into it by any means. You guys have been amazing to me and I am very, very blessed and I'm very grateful for you guys. I hope you guys know that. Thus, that's the point of the giveaway. And it won't be the last giveaway. I'll be doing a bunch of giveaways at every milestone from here on out because I'm so grateful and I want to give back some of what you guys have really blessed me with. So, okay, we're going to jump into the positions tab. It's going to get ugly. It's going to get ugly and we're not going to like it. Oh man, it's so much red, but we're relatively used to it. Now, big bummer. IWMY is down 1.52%. It was green last week, but QQQY surprisingly is up 0.5%. Now, when you're thinking about this, like, oh, it's not that bad week to week, but again, we've been invested for 21 weeks at this point. So I would like a pretty solid return in 21 weeks. We're really getting up there in the time invested. And although the market's been rocky, we do have to give them some grace because of that. Still, these two consistently battling for the worst performer, and now they're not even close. They're really not even close, which is good and bad. Then we have WDTE, 4.7% up, which is absolutely solid. This one pays a lot less out, has a lot better price return, which is where I'm hoping the Defiance ETFs kind of move towards. Come on, don't need 100% dividend yield. Give us 25 to 35 and just a way less NAV erosion, if any. If you have to throw it in there, throw it in there. But come on, that's what we're looking for. And then we have QDTE. 5.19%. It did outperform XDTE, which is really, really interesting. These two kind of go back and forth. QDTE has come out on top more than XDTE, but they do bounce back and forth. RDTE, surprisingly, this is decent. It was green last week, but it took a beating this week. And so it is red, which I'm not thrilled about, of course. I'm sure you guys aren't either, but I thought it would be worse. Then we get into YMAG, only up 7.7%. This thing was up almost 10% last week, so it's fallen off quite a bit. And same with YMAX. YMAX is down almost 5% from last week. When we have a red week, these things are not immune to that. So remember, they may even be, I guess you could consider them higher risk than a lot of the other investments or traditional investments that we're used to. So when there's a red week, these things, they take a beating. Then we have YBTC, still positive, which I was surprised about. It's down 6.3%, but still positive 2.6%, meaning it's paying out some pretty crazy dividends. Next, we have LFGY, which just absolutely got wrecked. We're down 20% market-wise. Total return, we're down 13.6%, which not happy about. Let's hope this one bounces back. I was really surprised because I thought crypto dropping would affect YBTC more. So why is LFGY taking so much slack? I'm curious. What do you guys think? Why is one so much worse than the other? I guess maybe the individual funds in LFGY compared to how YBTC is trading. Who knows? If you know, drop a comment. I always read through and talk to you guys in the comments. I hope you guys know that. Leave a comment if you want to discuss anything with me. I really appreciate it. Then we have GPTY down 7.17%, which is rough. It's not as bad as it could have been, but it's just been rough. The tech sector's taking a hit. You know, we've seen it with LFGY and GPTY. So not great. We know that the tech sector had, you know, we watched MSTR drop a little. We watched NVDA drop a little. And so maybe this is partially because of that. I don't know fully. Let me know what you guys think. And then lastly, we have SDTY down 1.86%. Not terrible. Could be a lot worse. Let's look at what has paid out the most dividends. This is key because if you're an income focused investor, you want to know what's actually going to pay you the most. And of course, we have YieldMax coming in and in first place. It has paid out the most. It is very, very solid. $20 so far paid out into the account with $100 invested, which is really, really good. Then second, we have YMAG. Again, those two are always competing for first place, which is fun to watch. Almost $18. And then we have a lot in the 16s. We have RDTE with 16, which is crazy. It's so beaten down, but it still pays out super high. We have QDTE with 1680, a little bit higher. And then we have IWMY with 1661. And they kind of bounce around after that. You know, the new ones we haven't been tracking for as long, so the yields are lower. The funny thing is WDTE is at 944 and YBTC is nearly catching it. It will be probably a week or two until it does finally catch it, despite being way more recent of a fund. So I hope you guys enjoyed this video. Let me know if you did by liking and subscribing down below. I really appreciate you guys for watching, and I hope to see you in the next video.